As meme stock mania reached a frenzy in early 2021, Wall Street watchers wondered whether regulators would intervene. Some things, such as the rapid rise in heavily shorted stocks like GameStop, raised concerns about traders coordinating buys to force the short squeeze.
I got 2 words for you. Drop dead.
Essentially, this means that the stock's price would gain quickly and force short sellers who had borrowed shares anticipating they'd fall in price to cover their positions. To many, the surge in shares of GameStop, AMC Entertainment, and other companies seemed to signal that something was amiss in the market. But while it was unusual, the roller coaster ride in these shares may have reflected that the market was actually working, which is to say it was matching buyers with sellers and that a new crop of market participants was emerging. What was concerning, however, was the decision of brokerages such as Robinhood, Webull, and E-Trade to halt certain trading activities in some of these stocks.
Perhaps Mel's not such a big shot after all.
If you scrolled social media and saw some of the posts of angry retail traders, you may have been convinced that the brokerages were bowing to pressure from their hedge fund clients who had shorted shares. Basically, once trading was halted, traders were left only with the option to sell or hold shares, blocking many new buyers. The real reason for the halts was many brokerages were notified by their clearing firms that they needed to pause trading so that previous trades could settle. Clearing firms basically serve as the plumbing for the financial system. The explanation for the disruption points to a flaw in market structure. Retail investors had hoped that the Securities and Exchange Commission would unveil a larger conspiracy or at least punish some of the players. But in a 45-page report released in October, the SEC suggested that it took too long for trades to settle, and shortening the settlement cycle from trade plus 2 days could mitigate such risks in the future. In its concluding remarks, the SEC said people may disagree about the prospects of GameStop and other meme stocks, but those disagreements are what should lead to price discovery rather than disruptions. It added that the events of January 2021 provided an opportunity to reflect on market structure in the interest of protecting investors, maintaining fair, orderly, and efficient markets, and facilitating capital formation. Okay, so it is the day after Thanksgiving, working from home. So let's talk about what's going on today. Thanksgiving night, we learned there's worries over a new variant of coronavirus. We saw a huge sell-off in markets, with the Dow at one point falling about 1,000 points. And just about everything except for those old stay-at-home stocks was really getting impacted by this. So first, I do want to bring up that options trade, which is expiring today. You may remember about 3 weeks ago, I bought a call option on Bed Bath & Beyond. I figured, you know what, this stock, even though I'm getting in kind of late, may still have some juice on it. Not exactly what I was hoping for. Oh, total return down 97%. So that's $63 that I just lost. I bet the wrong way. That was the premium that I paid, and I'm going to lose all of that, it looks like. I want to take a look at the other parts of my portfolio. Are they helping me out at all? Doesn't look like it. Remember, I started with $250 in this portfolio. As of today's trading, I now have almost $178 in my portfolio. Definitely being hugely impacted by that sell-off that we're seeing in Friday's trading. Remember, with that call option, I'm basically forfeiting $63. But let's take a look at my holdings. Smile Direct. I thought last week that maybe I could double down and, kind of buy on this huge dip that share saw. That wasn't a smart move. My total return for Smile Direct Club, basically down 40%. Cleveland Cliffs. This was kind of the hero of my portfolio. I was doing really well on hopes of infrastructure spending. At one point, I had close to, I think, a 20% gain in it. Now with Friday's sell-off, my total return is about 8.4%. That's not a bad return for a stock you hold for a few weeks. But on a day when I've lost $63, or basically a quarter of my portfolio, doesn't feel that great. So let's just pull up the chart on that. I mean, it's kind of been like, whee, going down. And just for fun, let's take a look at the stock that I got for free from Robinhood. Basically down, 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 down. So this has not been a good trading day, especially portfolio is looking pretty weak. For first options trade. I guess that's what you learn. I did know going into it that there was a risk of losing that premium. Couldn't imagine if I had made a riskier type of options trade with leverage, how, if not in Bed Bath & Beyond and some other stock, how much worse it could be. I at least kind of capped my losses. But yeah, I'm just gonna eat my feelings. I kind of need to get some more pumpkin pie. All right, I'll see you guys next time. On our next episode, it's time to cash in or cut our losses.